Okay, good afternoon, everyone. Welcome, and thank you for joining us today. I'm Cela Kim, Digital Asset Researcher at Upbit, and I'll be your moderator for this session. Okay. So, today we'll be exploring the topic of RWA. But we're not just going to cover the RWA hype, so there's so much virals going out, but we're going to examine the narrative itself, whether the RWA is generating the real user demand or not. So before we begin the discussion, I would like to clarify the concept of RWA. So what is RWA? RWA is literally assets from the real world. It's an abbreviated form of real-world assets, such as stock, bond, ETF, gold, etc. And they're tokenized on the blockchain to improve accessibility, transparency, and liquidity. It sounds nice, isn't it? However, it has taken time to get adopted by the public, as there was a difference between traditional finance and on-chain finance. So, to cover this whole story, we've invited real experts from the industry. Rania Rahardja from Ondo Finance, a leading RWA platform which bridges traditional finance and on-chain finance. And Doowan Nam from Sky, formerly MakerDAO, a definite OG in terms of RWA adoption and stablecoins. Please make a round of applause to them. Okay, I'd like to invite each of you to briefly introduce yourself, your current role, and your interest on this topic. Doowan, please.
Yes, thank you everyone for being here. So my name is Du. I'm the BD lead for Sky, used to call Maker. I'm sometimes still more used to saying Maker, to be honest. Don't tell PR manager about it. I've been with Sky for over 7 years now. So I focus on the especially for the stablecoin adoption as well as the growth. I'm also co-founder and CEO at StableLab, and for that one, focus more on the governance side.
Okay.
Thank you for the introduction, Cela. Happy to be here. So my name is Rania, and I cover sales and business development for Ondo Finance here in APAC. I started my career in Barclays London at the ventures team before moving to Web3 about 5 years ago. Should we also introduce about the project?
Okay, we'll just introduce later. Okay.
So for those who don't know, Ondo Finance, we're one of the leaders in the RWA segment. We're the first and one of the largest issuers of tokenized treasury bills with 1.5 billion in TVL. Tokenized treasuries is also known as a yield-bearing stablecoin alternative, which I'll go into more details later. But we've also launched tokenized stocks on Ethereum chain just last week. Yeah. It's been a very busy week for the team. We launched basically 100 single US stocks and ETFs. This means you can buy a tokenized Apple stock, Tesla, Amazon, all on Ethereum chain, permissionlessly. They can be transferred. And in just our 3 days of launch, we actually became the #1 issuer of tokenized stocks with 50 million of TVL. So very excited to be here today to share more also on why we have RWAs and who are the users behind them.
Okay, so to kick things off, I would like to start with the broad question, where things stand today. Regarding the market vibe, there's hypes going on with the RWA. But do you think that it is just a market narrative or backed up by the real user demand? And Rania, please.
Yeah, and I really like how you started this by setting the stage, right? What is RWAs? Because I think most people still don't really, understand this concept. You mentioned, stocks, bonds, financial assets, or RWA. Some people actually come up to me and say, I can't touch or feel a stock. How is that even a real world asset? And now you're tokenizing this. But yeah, just to really take a step back, the first RWA that's really seen a product market fit is actually the US dollar via stable coins, USDC, USDT. That's a 300 billion market cap today. And maybe people may not even realize that the stablecoin is actually a form of RWA, and there are real tangible benefits and why users here use them. I'm sure who here uses stablecoin? Anyone uses USDC, USDT? No. Okay, a few.
There are several.
Yeah, but I think Eric Trump mentioned in his speech this morning as well, just the ideas of instant settlement, cross-border payments. It does make things a lot more efficient. So I think a lot of this marketing narrative that has really started a lot, I believe, actually in 2022 when a major cryptocurrency token actually collapsed. Back in those days, people were more actually interested in just yield. People were chasing high yields, 30%, 50%, but they didn't really actually understand what was driving the hype behind that and where the yield's coming from. But since then, I think the users today are a lot more sophisticated and savvy. They start asking more difficult questions like, where is the yield actually coming from? Who is paying out this yield? And that, I think, is also another reason why this whole new other RWA category of tokenized treasuries started emerging.
Okay. And Doowan, can you add on your perspective on this?
Yeah, sure. I mean, so for RWA itself, as you mentioned, it's not something that's completely new. In fact, the idea for it has been around for a long time and has been implemented. I think that some of the interesting changes, I think especially focusing on the DeFi, like decentralized finance, is the fact that there was a recognition that a lot of the DeFi aspect was used to be trying to kind of separate or be independent from the traditional finance. But as the ecosystem grew, we saw that it's very difficult to scale just based on crypto only, right? Like, for example, even for Sky, we had the Ethereum as a collateral, and then that's how initial stablecoin was minted, and that was great. But the problem was that crypto industry is still kind of restricted, by the size of the cryptocurrency. So if you want to expand beyond it, then you do need to have a much bigger market from the traditional finance and those real assets. So that was also one of our kind of reasoning to also go into real assets, trying to have U.S. bonds and others. And I think that one of the key changes, even for some of the stablecoin, is that long time ago yields were not as high. So it was also a bit less attractive, and also the legal clarity wasn't really there. I think that these days, especially with the a bit more friendly environment, I think we're definitely seeing more development for such.
Okay.
Yeah.
So Rania introduced RWA examples and TVLs, and he introduced like DeFi-related RWA-backed stable coins. So building on that, let's move to something much more concrete. So which are some specific RWA structures, assets, or examples that have proven to generate real adoption and tangible returns? Doowan, can you go ahead?
Yeah, so I think there are several examples. Of course, nowadays we're focusing a lot on the U.S. Treasury bonds, and I think that kind of makes sense. Because even for Sky ourselves, we actually try with many different assets. I know that especially in Korea, people like to talk about real estate. They like say, I want to have an apartment or have it as a collateral. And that's great. But so we actually had the experience doing, for example, those kind of real estate, other different kind of collateral. And then I think that at the fundamental level, what we realize is that it's still very risky, right? Because if they're not able to get it from the tradition, like loan, let's say, from the traditional finance, the problem means that their risk is a bit too high. So if they're coming to blockchain, something that they're usually not familiar with, willing to do it, that means that their risk tolerance is higher. Probably also means that their risk profile is a bit higher. So we also have some, good important, lessons related to it. Now, the reason why many, including Ondo and others, are looking into U.S. Treasury bonds is because it's very liquid. The yield is also high, and it's also more credible, right? Like it's easier to verify. It's also like, let's say, in terms of us, one of the important things is that if, let's say, there's a demand, for people to try to withdraw, then they need to, for example, we need to unwind the positions. And for other assets, it might be difficult, but for U.S. Treasury bonds, it's more, liquid, so it's possible. Now, beside that, there's also some other aspects. I'm also aware that there are some that even do like a collateral for people's credit. I personally think that it's not the best idea because we know that people's credit is great, but sometimes they can also go default more likely, right? So I see many cases like that, but I think that of course they're a bit more on the risky side, and there's definitely a lot of room to grow, but also a lot of aspects to solve. And
Rania, please.
Yeah, so I think Nam's touched on a few really great points over there. Part of the reason also being why we chose to, U.S. Treasury bills being the most liquid, the most seen as credible, all these points. But I think just in terms of how we see the utility with RWA, like I said, if we take a step back, the first one with the stable coins, really more on just cross-border payments, instant settlement, these sort of benefits we see, and how we chose to use on treasury bills is partly because we feel like holders of stable coins should themselves be the ones to hold this native yield themselves. Why should we let the stablecoin issuers kind of take all the profit? And with the yield-bearing stablecoin, one thing that makes it really unique and different from traditional stablecoins is that you can do so much more with it, not just as holding it as a static cash management treasury solution, as Nam said, just earning the safe 4.2% yield. You can use it as payment on certain platforms. You can use it as collateral on certain borrowing and lending protocols. There's just so much more utility that you can do with these. And for us, at least for RWAs, how we then again look ahead, if we take the same lens we did for tokenized treasuries, they are the most liquid, the most credible product. What is next? Well, the US public securities is another $1 trillion market. Very liquid, seen kind of existing real demand in the real world, and therefore we look into tokenizing, bring them on chain. As I mentioned, we did our launch last week. What we're really also trying to solve here is the problems of accessibility that Cela you talked about. That's for some users in emerging economies, it's very difficult for them to access high quality financial assets, and they can do that on chain. The second bit really is operational efficiencies. Just like with stable coins, you can enable instant settlement. Right now, we enable that 24/5, drawing on the liquidity in the real world and traditional financial markets. But our long-term goal is to also enable that 24/7. And the last bit really is capital efficiencies, so you can do more with your RWAs on chain, not just buying a Tesla stock and let it sit there. You can actually use that as collateral on DeFi pools and DEXs in the future. That's also the long-term goal for us.
Okay, great. Interestingly, Doowan pointed out the limitations and the room for the growth of the RWA, which has to be grown to, and Rania pointed out some of the possibilities of how RWA can be applied into the practice and be expand to much more utilizable way. And as we've now looked into how RWAs are being applied in practice, we'll now much more focus on how their product design balance between traditional finance and on-chain finance while ensuring the transparency and trust. Okay, this time, Rania, go first.
Sure. So one thing that I think is really unique about RWAs and why I personally am incredibly bullish about this segment is we can combine the sort of traditional investor protection we see in the real world as well as the on-chain utility like the DeFi use cases that I mentioned. So just take our retail yield-bearing stablecoin, for instance. We have a very unique structure called a bankruptcy remote design. This actually means that any holders of our assets have a direct claim to the underlying asset, even if Ondo Finance, the issuer, cease to operate even tomorrow. So this kind of traditional kind of financial protection is something that is really unique in the world of RWA within this crypto space. But at the same time, with your retail yield-bearing stablecoin, you can actually use it, as I mentioned, payments, collateral, etc. All these DeFi usability. RWA up to date, I think, is still the only sort of asset class, if you may, that really I think transcends kind of both worlds.
Okay, and Doowan?
Yeah, I'm a bit more skeptical perspective, to be honest, based on experience. Because even if you try to set up a lot of the legal structures, we have realized that this also happens in traditional finance, right? Like in traditional finance, we also hear from more, let's say, other banks, or like commercial banks and others, where they have, for example, trouble trying to get the collateral back or get the loan back and other things, right? So I think actually for a lot of structures, we have realized it's of course easy to set it as more simple and clear, but I think that's also why that we have moved to U.S. Treasury, and we had experience trying other different collateral and also other type of real assets. But what we realized is that even if the legal structure is somehow clear, it doesn't really because the issue is that there's a lot of risk that's inherent in the traditional system that you cannot mitigate just by blockchain. So one of the issues that we saw was, for example, what happens if there's, let's say, mismanagement or let's say embezzlement or those aspects, right? Like that's of course a very serious aspects. But if there, for example, from the let's say, off-chain doing those, that itself doesn't necessarily get reflected on the on-chain right away, right? Because the idea is that they have to report, and the on-chain then gets kind of updated. So there's definitely the lag time aspects. And then the thing is, like, if, for example, let's say, unless this is like a specific structure just for it, a lot of times it's a bit mixed, is then the company itself, let's say, is not functional, or let's say people left or others. So then that also means then that we need to spend more time and resources on the legal side, right? So like I mean, and I think that this is probably the, on those perspective as well, is like having kind of this structure that focuses on US Treasury is very appealing, because for others, you might need to discuss with such complex issues. For this, it's much more liquid. And if, for example, US Treasury, let's say, goes down, that kind of means the US government goes down, which is probably unlikely to happen, probably, unless you're one of those conspiracy theorists. We can talk about it. So it's more likely that that itself is not an issue. But for a lot of the other real assets, and we saw this from our partners too, it's like if you try to have it beyond that, like let's say have a more traditional commercial companies, even emerging startups and things like that, or like let's say invoices, real estate. I think that those are where it's very, very tricky, and even with the legal structure, it is difficult to actually enforce it.
Yeah, I think I would just maybe like add on to that. I don't think obviously bringing everything on chain will solve all the problems we see inherent in the real world. And I think Nam touched on a very interesting thing, which is the bit of the counterparty risk. And yeah, that kind of risk would always, I think, exist. But at least uniquely to that bankruptcy remote legal structure, that's something that we can enforce. And I think is really quite unique in this RWA space. And not all RWA providers, use that. Even with some stablecoin issuers, even if they're over collateralized and have daily audits, I think a lot of users don't actually realize they don't legally have a recourse to the underlying assets. Yeah. And then that's something, again, why I think this bankruptcy remote structure is just like fundamentally unique and groundbreaking in a way.
Yeah. Actually, RWA is quite tricky, as you have to satisfy all the regulatory compliance and also the on-chain finance needs from DeFi native users. So it is quite tricky. And they told us how they're putting into the consideration of satisfying the both needs from that. And here is for our last question for the future outlook. So in the next 2 to 3 years, which structures or use cases do you think that it'll be quite promising to be sustainable for the RWA? And Doowan?
Okay. I think that it's actually quite interesting. Yeah. Because I think that this is a bit like cycle. Because if you remember back in, I remember 2018, 17, that was the era of a lot of many things, but also STO was one of the big things, right? So the idea was okay, right now for a lot of the traditional, finance, liquidity is not, especially there can be a lot of, let's say, tokenizing, real estate and other things. Now, do I see it potentially coming to real asset in the near future? Not necessarily as big, but I do think that that's definitely an area that a lot of different partners and protocols are looking into, as well as even the undercollateralized ones. So, for example, we've seen, many of them learned their lessons because there were quite a lot of defaults, but I think that among it, they also realized that there can be maybe potential way to scale up, right? Because one of the issues with the treasury bond focus, is that, of course, the yield is high, but it doesn't mean the yield will be high forever. In fact, if you look at the past decade, there were times that yield was very low or extremely low, right? So it's not something that, for example, this yield will last forever. And of course, there's speculation, they might cut rates and stuff. So I think that eventually, from DeFi and the participant, they're going to look for yield that's higher. Now, if they're looking for yield that's higher, they're probably going to also look at ones that potentially are riskier, right? Or provide more premium for it. So I definitely see that could happen, especially because I don't really think that high rates in US Treasury will last into the far future. But at the same time, that is also the point of the industry, and is to diversify and also try new things. So.
Okay.
So for us, we're incredibly excited about the launch of our tokenized stocks. I think part of the rationale is, again, back to the way we see the RW narrative. There are stable coins, there's tokenized treasuries where users want to hold the yield themselves. But as Doowan, rightly pointed out, US Treasury rates have been steadily falling, and there are more talks about the rate cuts. Right now, it's really at 4%. If it goes lower, it's less attractive to users, especially when they have other options on, the DeFi pools. Why we again think about tokenized stocks is for the reasons I mentioned earlier. That the liquidity, the existing demand in the real world, but more that they can actually do on chain. And I think even as recent as today, the Nasdaq's even thinking about, enabling the trading of tokenized stocks.
Yeah.
We've seen other big Web2 kind of brokerages like Robinhood also entering this space. I think more and more people starting to realize actually the benefits of having tokenized stocks and ETFs and what more it can do. And Ondo just wants to be sure that we're uniquely positioning ourselves to be in this space to really bridge the gap between these traditional financial players, be it the issuers, the asset managers, broker-dealers, as well as connecting these assets into the hands of the crypto-native users.
Okay, it sounds quite interesting. Like if Nasdaq supports the tokenized stocks, it'll be quite
it'll be
huge. Yeah. So luckily we have time for the individual questions, so we can hear the much more story from each project. And we'll have the individual question for Sky first.
Okay.
So from a user perspective, what do DeFi participants value most when using the RWA-backed stablecoins? I mean, liquidity, yield, or stability?
So actually, that was a big lesson for us as time went, because of course back then DeFi was very small, and then when I joined, it was like below 1 billion total for everyone. But then I think the one thing that we realized is that at the end of the day, a lot of users, especially whether that's more traditional, whether that's, let's say, retail, they really care about liquidity, and then they really care about access. And I think that that's actually what a lot of the other stablecoins did very well, and it's also some for example, we talk about USDT or USDC, and in a way that they really have that kind of allow users to easily access the liquidity, and that also means that they can then have an advantage in, let's say, these kind of payments. Now, for us, of course, we also look into the payment side as well. But I think that for us, we've been looking more into the yield, and partly that is, because if you think about a more traditional industry, or like let's say even for those stable coins, the closer you are, the more inefficient technically is in terms of operations. You need a lot more people to manage it.
Yeah.
Like some of the interesting conversation I also had with the traditional banks is that a lot of traditional banks, they might have, for example, assets that's a bit similar to TVL that we have, but they need to have, let's say, thousands, a lot of employees, right?
Yeah.
Because the structure there is much more, you kind of need to have a lot of those people. Now, for us, because we are based on smart contract, we don't need as much. So that means that we can, dedicate more, back into the yield. So in terms of yield, we're definitely more competitive. I think that in terms of those payment and other side, we saw that a lot of those more, let's say other stablecoins, they have those more access. So I would say liquidity is very important, but also yields and those aspects also can be very important.
And expanding on that, how are the users of Sky, especially?
So I would say the users of Sky are definitely into both liquidity aspects and also yield aspects.
Okay.
And then because for example USDC or USDT, they're very liquid as well. And of course, USDS is also liquid, but we also recognize that at the fundamental level, the way that they are able to, for example, convert to fiat very easily is something that's, of course, it's hard to be just like them, right? Of course we're liquid, but we're not as liquid as them. However, the aspect that we can, of course, push for is the aspect for yield, as well as that having more, different kind of collateral, right? Because, for example, we users can go and have Ethereum or others as collateral. At the moment, for let's say USDC is still, based on USD, and that also means that, of course, it's liquid in that way, but also means that they're kind of restricted in such a way. So I would say that our users are definitely ones that are more familiar with DeFi, but also the users that care about both liquidity and also yield. That's kind of our observation so far.
That's interesting. Okay, I'll move on to the individual question for the Ondo Finance. it seems that on those RWA products have been like primarily focused on the institutional investors such as BlackRock, but like looking ahead, what kind of strategies do you have to be broaden accessibility to retail user and the market?
Yeah, so I think it's a bit of a misconception when people always think that Ondo only focuses on institutional investors. We actually have an institutional as well as a retail yield-bearing stablecoin product. The retail product is not available to U.S. persons and subject to certain jurisdictions restrictions as well. But just in terms of how we actually work with institutions, part of that is actually also on the supply side. We work with BlackRock, Fidelity, Franklin Templeton, WisdomTree to help them basically distribute their tokenized money market fund into ultimately on-chain holders. These would be obviously those who pass our requirements. Our retail yield-bearing stable coin product actually is the one that has a larger TVL amongst both, and there's just a lot more we can do with them because they are actually permissionless, as I mentioned, to enable them to do borrowing and lending, payments, etc.
Okay, so Ondo is not just focusing on the institutional investor, but also like having like approaches to the retail.
Yes.
Yeah,
I think the way we really see ourselves is a bridge between these traditional financial institutions who may not really understand the crypto space, and we help them package their products in a way that meets the needs of these on-chain holders.
Okay, so we're kind of almost out of time, but we'll open the floor for just one audience question. And we have gathered previously for the audience question. And let me see. Which RWA asset classes are currently growing the fastest on different chains? And can you share the different perspectives on that?
I mean, I'm biased, but I would share my perspective. I definitely think tokenized stocks is fast growing. As I mentioned, I mean, again, if we think about this, tokenized treasuries have basically tripled in TVL just in the last year. It's now at 7.5 billion of market cap, and this is still just a fraction of the $1 trillion kind of industry that exists in the real world. If we just look at the tokenized stock space, at the moment, there's really only 3 to 5 different players. Some have been around for years. Ondo was kind of the latest entrance where we launched that last week, and within the same week of launch, as I mentioned, we hit 50 million in TVL to take the #1 spot. But this is still just a very new, nascent, and small market. And I think if we just look at the trajectory of where stable coins are at, where tokenized treasury bills are at, I think there's just so much more room for tokenized stocks to get to.
How do you think, Doowan?
Well, I mean, we're probably more conservative.
Okay.
But I mean, of course, the kind of easy way is okay. Well, U.S. Treasury side has been growing, but of course, like actually, I think like Sky is like we ourselves we're probably not going to get into it, but I do think that undercollateralized or like credit based is quite interesting. And then we've seen our partners that tried it and failed many times. But at the same time, I think there's definitely a silver lining there where they're learning their lessons and they're at least getting better at it. So they're still losing money, but but at the same time, I do think that because if you look at the traditional aspects, there's definitely a lot of the loans are based on collateral. But there is also a big market where it's based on credit, and it's very difficult to try to put credit into blockchain because even on the off-chain side, credit itself is. But at the same time, I think that if there's actually a project that figures that out, I think there's definitely a room because I think that one of the aspects that's like. It's kind of flying close to the sun, where it's like, if you can actually do it, it's like great. But usually, it's kind of difficult to do it, right? So, I'm definitely seeing more projects and like sharing about their ideas for it. So I definitely think that there will be actually more growth that we don't really see because for now, for our framework, it doesn't work. But the point of blockchain and the kind of point of a conference like this is to also think about ways to break that barrier, right? So I think that it could happen one day. Okay,
fascinating. So on the stocks will be growing, and the credit-based one would be kind of it could be quite conservative for the like hyped growth, but it's still growing continuously. So thank you for those thoughtful questions from the audience. And as we're almost really out of time, so we'd like to invite each of our panelists to share just one brief final thought before we close.
Yeah, happy to go first. I think the one thing, if anything, I'd like everyone to remember leaving this room is what stablecoins did for the US dollars, Ondo Finance will do for US public stocks.
Yeah, I think that for me it would be it's always important to look at from both facts and also the speculation aspects, because of course real assets grow, it's growing very fast, and I think that it has shown a lot of the demand and also supply side. But at the same time, there's definitely a concern that it's something that people are, let's say, either investing or trying to do it without thinking much about it. Like, especially the market is very competitive, and I know that even just this month I heard I think at least 10 new projects that were thinking about doing something related to real assets. That's great, but at the same time you also have to remember that if the industry is getting oversaturated, that's also not necessarily good, right? So I would say that especially if you're thinking about potentially doing it, kind of look at not just from the industry, but also looking from, okay, what's your unique position, right? Like if you're trying to do the same thing, for example, other real asset related projects are already doing, then you're just kind of being one of them, right? So what's your really unique position and how to really push for it? So that'll be kind of thought, especially if you're thinking about potentially starting a project here.
Maybe I'll just add one thing to that. I do believe that the more players growing in will actually just raise more awareness of RWA, which is good. At the end of the day, the best horse wins, the one who has the best product market fit, the one that has the best distribution reach to users.
Okay. Thank you to our panelists for your valuable insights, and thank you to audience for your participation. And thank you all. So please make a round of applause to them.